And then you've got this spend, this expense that I just wonder, are you getting the bang for your buck here?
But you work here and you want to be profitable for the agency. So they really have to change their thinking.
If you want to be a $10 million agency, do you think a $10 million agency knows these numbers? The answer is hopefully. All right, everybody. So today we are thinking about what is normal and natural for agency performance metrics. And this is one of those things I feel like it's like when you're in high school and it's like, what's it like to kiss a boy? You hear from your best friend. And I think there's like a lot of false information out in the universe of like what it is. Like we were teasing on the last podcast. I'll ask agencies what their retention rate is, and they're like, high. What does that mean? What does that mean? And I'll say up front too, for everybody, I think sometimes getting the agency metrics clean and so that you can make business decisions off of is a journey. I think a lot of agency owners get very frustrated with reporting through the management systems. And I'm also here to tell you in 2025, it's time to end that excuse. You can learn it. You can get it cleaned up. You can master it. And by the way, the easiest time that it's ever going to be is right now, because your agency hopefully is the smallest it will ever be right now. So it will only get harder as you grow. So I'm joined here today with Kayla from Agency CFO and Kelly Juilliard from Insurance Capital Group. And they're going to help us with some of these metrics of what they see. So Kelly does agency valuations and helping agencies for purchase or sale. And Kayla can be your outsourced fractional CFO to deal so that you can sell more insurance. So, what are some of I think kind of when I think about the normal natural metrics, I think retention, I think book growth, I think revenue per employee, I think, producer goals, I think profit margin, loss ratios. Is there anything else that you guys, think of that maybe is missing from that list?
I would argue revenue per employee is extremely important. However, when you're operating for, you're not going to sell anytime soon, especially within your book size, knowing spread per employee. So if you were to take revenue per employee less comp per employee, you're going to get your spread, and that's a best practice number. And essentially that tells you what you have left over to spend.
I think that that's really important because, payrolls have gone up, right? And so looking to see, am I in alignment on that? I often find that agencies aren't very in alignment with the revenue per employee very well to start with. So that's an area to kind of get through. How about you, Kelly? Do you have any to kind of add to that list?
Well, everything you talked about is that, revenue per employee and profit margin or EBITDA margin are kind of the two basic, that's table stakes that you've got to be mindful.
Yeah.
And to Kayla's point, when you are growing your agency and investing in your agency, do so deliberately. So you're really spending money for growth. You're really spending money to make money and not just inertia. So a lot of times I talk to agencies about, are you being strategic or is this inertia? And that delineation, I think in terms of metrics that are helpful, it really is just kind of your table stakes of, renewal retention, loss ratio, carrier quality, policies per account, revenue per employee, all those things, they're critical. The one thing I would say to keep an eye on is technology spend. That's another one when I look at like best practices and we're selling an agency and that profit margin is generally on an EBITDA basis, we're going to get to 25 to 30, hopefully over 30%. Technology, there's just so many things out there. And I'll see an agency that has many, many tech applications and then
Overlap and that nobody knows how to use.
But my best friend who owns an agency is using this, so I have to buy it. So I have to buy these five different things that do the same thing.
And a lot of times they're woefully under implemented, or there's a lack of training or follow through for that technology to really have impact. And then you've got this spend, this expense that I just wonder, are you getting the bang for your buck here?
Yeah, I would agree with that. And I think a lot of times it's the lack of accountability to use said technology. So either it wasn't really rolled out well, or the culture is broken where people just do whatever they want. And I was at an agency that had a piece of technology, and let's just say that this was September, we were there, and nobody had logged into it from since April. And it was, like it was meant to help, with sales and all these other things. And I was just like, well, leadership team, like that's a problem because you're not using it either then to like make sure that like things are working correctly. And everybody had their own reasons. Oh, I didn't know, or I tried once, my login didn't work, everything happened. So I really like that, Kelly. And in our strategic plan for agency, we actually have a tech review, like list out, go to your budget or go to your P&L, list out all the technology you're paying for, and just go in and look at some of the reports. Like, are people using this?
Yeah.
Yeah. I will say, I will probably repeat these 5 key items until I'm blue in the face or out of the industry. But, knowing your fee and commission and your revenues, whether it's the growth rate, where it's coming from, different dynamics, there's different reports, there's profitability, there's cash flow, there's new business written. So what we're adding to the books that year. And then, lastly is retention. And there are different metrics within each of those 5 buckets that I think is important for a growing agency. So on the fee and commission side, right, we have to know how that's coming in, your revenue style, when are your peak seasons, low seasons? Do we have to reserve for those low seasons? I think for gross revenue, right, profit share is the biggest piece that turns gross revenue either up or down if it's not 8 to 10%. You've got to know that carrier mix is at certain loss ratios. There are different smaller points, I'll say, or metrics to those big items. And a lot of agencies, they look at it and say, I don't want an assessment of this, or I don't know where to start. And I feel like that's a really simplistic, version to look at, to at least start with, to know who to contact, of knowing where you might be falling short of those 5 key areas.
So let's break down some, right? Maybe, Kayla, you can answer this one. Like, what is a good profit margin? And I know that can vary based on size of agency, or like Kelly said, if you're in growth mode, but I always feel like there's like a starting point and then from there you sort of adjust.
I will say most best practice categories fall within a margin or two of 25%. But I'm actually going to tee this up for Kelly because Kelly, well, I would say Kelly D, but we've got 2 of them. But she, a few years ago, worked with an agency that we were working with as well, and just giving them some insight and initial guidance. And it's always stuck with me. They had a pretty high profitability margin, let's say 30, 36 for sample purposes. And it would give them a really good, idea of what a growing agency. So sometimes if your profit margin is too high, that's also an indication that you're not growing in the right direction.
Mm-hmm.
So you can speak to that.
Look at, is that a sustainable EBITDA margin? And what's your organic growth? And I'm not talking about top line revenue. I want to see policies in force. The last couple of years, because there's been so much rate come into the market, that there's a false sense of growth.
100%.
Because there's been so much rate. And believe me, owners have worked hard.
Yeah.
They've worked hard to keep business from going out the back door with these increases in rate. But at the same time, I want to see the PIF, I want to see the policies in force, and to really show true organic growth.
Mhm.
We say the same thing too when somebody's closing ratio is too high. I'm like, you don't have enough at bats. You're taking the lowest hanging fruit. And, so it's like you do have to kind of look all over the numbers, right? So then I think the next thing we can talk about is like, what's a good retention rate, right? Like, because this is also, again, high, good. And we've kind of joked around this, but you can't look at your carrier reports because that's if you're an independent agent, that's one carrier. So it could be your largest, but that doesn't really make sense to me. We have some agencies that are over 96% retention, but they've worked at that for 7 or 8 years, right? That's not like a overnight thing. Like the book quality is very good. They're rounded accounts. They have been doing renewal reviews, and that's an anomaly, right? That's like a bit of a unicorn. I'd say most of our clients have around like 92%. Some are and in the journey to get up there, some start maybe in the high 80s, but what do you guys see?
I would argue, how are you measuring it first? Are we talking policy count, customer count, premium
revenue?
And at the end of the day, I think all of the metrics of retention are important, especially as you're trying to understand, that blended for the book. However, revenue is the part that takes away from your fee and commission. So at the end of the day, we've got to know how much revenue loss. And I think generally, and what I've been explaining to agencies is you're probably seeing lower retention rates, but larger losses every month because you're rewriting more, right? You're having to adjust to the marketplace that you're in, especially geography. If you're in Florida or California, I'm so sorry. Your activity is probably a lot higher than other agencies. So I think anywhere from 90 to 93 is always the benchmark I like to give agencies because it's not going to swing it too crazy to not have 95, 94. At 93, that's sustainable up until, whatever your revenue point is to grow. If it's 10 million, I think 90% is probably more in line with what's average. And on the high side, 93. I think if you're at the 96, 97 level in a revenue standpoint, you are going like above and beyond to review your policies to understand the losses and make revisions. But I will say generally out of what we see, it's around 90 to 93.
Well, I'll say this too. We've actually seen our clients' retention rates go up because when people shop, there's nowhere to go. So people are taking the rates and not moving. So we've seen it kind of go up. And carriers have seen the same thing too, where they were predicting by raising rate and tightening underwriting guidelines that they would go down. And they've experienced about 2 to 3 points higher than they were budgeting for too. So it's kind of like interesting. But I think that our prediction is in the next 2 years, people are going to have to fight for their retention a lot harder because with the markets opening, people shop and find stuff. But Kelly, what do you have to say?
I'd like to kind of chime in here with another perspective, particularly with commercial lines, or if you're repositioning your agency from heavy personal to more commercial, it's okay to fire clients.
Yes.
Get rid of them. And, but so maybe I'll see retention that, in the 80s, sometimes in the 70s, and I get concerned. And then they're like, yeah, but look at what my average policy size did.
Yeah. Yeah.
We've repositioned
the book, right?
And, 80 personal, 20 commercial, and we've repositioned. So when you see some strategic action going on, there's more to the story.
Yeah.
And if you have needy clients that take way too much, time and energy, and you're having challenges with that revenue per employee or whatever it is, sometimes you need to really clean up some needy clients and get rid of them. And if you don't, again, it's that whole inertia versus strategic. And you think, well, I want to be in the 90s. You absolutely do. You want to be in the 90s, but you want it to be with the clients that you want.
I'd like to mention something about that as from the CSR perspective, you have to get your staff to rethink things because they're coming from this world where they just take everything that comes in the door. Oh, we have to write it. State law says we have to give them liability, and they just look at it the other way. We have to reshape the way they're thinking about clients and revenue. If the CSR's paycheck was based off the quality of the clients, they would act differently. But because they don't think that way,
Sure.
They're not thinking about the revenue for the agency. They're just thinking about, oh, what does the customer need? Let me make this payment. Let me take this payment. Let me talk to this customer for 20 minutes while they eat the candy from the candy jar while they're in front of me. And we have to start realizing it to get them to see that they're spending 20 minutes with this client who's just making a payment for a $300 auto policy compared to the time they're spending with those top dollar clients that really pay the bills. They're not even talking to them. And it takes them a while. It takes a while to get them to see that. You have to literally tell them a story. You just spent 20 minutes talking to this client while their hand is in the candy jar compared to not talking to, the top dollar ones that have all these business policies. So you have to really start talking to staff and get them to rethink the way they treat their clients and client tiering. Because I don't think they conceptualize the same way the leaders and the owners do, because they're not thinking about the money and the revenue. They're thinking about the client. What can I do for the client? But you work here and you want to be profitable for the agency. So they really have to change their thinking.
Great point. Client segmentation is super important to that conversation.
Mhm. And I also say this on retention as well. I think, we have a lot of agencies that do a lot of acquisitions. Like, you will see a change in your agency metrics, right? Like, especially if they're smaller books of business that were maybe run not as quite profitably or as efficiently. So just know too, I'm sure you guys see that too. Like, okay, you've acquired this, now the metrics of the business change. So what would be like a good sales velocity, right? So we're looking to say, and because I think that's always the key. It's, what should I have the producers? What should we try to hit? So where do you guys feel sales velocity should be?
Well, I will start with defining sales velocity. So, for anyone that isn't familiar with the term, it is how much new business you are writing divided by your ending fee and commission of the previous year. And it's essentially somewhat of a leading indicator, I will say, of how much growth you are experiencing and whether or not you're within that top margin to maintain. Most best practice metrics, I believe, are between 15 to 17. Don't quote me. I don't remember 24's newest rate, but I know I generally try to strive for 15% with most agencies. But again, that can also change by department. So going back to Kelly's point, commercial, personal, knowing your mix of business, your sales velocity can also change by department.
And for where do you guys like to see the agency growth be, right? So year over year, because that includes everything from rate, endorsements, if they're placing business with better carriers that are paying more. What is a good, healthy growth rate? And I think healthy is the key word, right? You can have some agencies that are acquiring, like, let's just keep acquisitions out of it because that's an uncontrollable, right? You can't ensure every year I'm going to do an acquisition of X size, but just normal, natural book organic growth. What would you peg a good number at?
Well, I mean, definitely I like to see at least 10% of organic growth. And we do look at a combined annual growth rate over the past 3 years or 5 years. And if you're hitting double digits, you're doing really well. Again, we drill down on all those things we talked about, like PIF, et cetera. But yeah, definitely the last few years, agencies have had a lot of tailwinds. We've had a booming economy. The GDP has been up. Unfortunately, we've experienced the inflation at the consumer level, but for an agency owner, business has been good the last few years. You've had some tailwinds with the economy, you've had rate, and you should have done pretty well. You should have come out of the pandemic in a good working capital position. You had the PPP loans, and then you had the ERTC tax credits. So life's been pretty good the last few years. It should have been. It should have been. Now, what do we see going forward? GDP is slowing. The economy is slowing. We just had an election. We have no idea what's the impact's going to be. I think the growth over the next few years might be a little more difficult than the last few years. I
agree.
One thing I strategically work with my clients is go to bea.gov, which is the Bureau of Economic Analysis.gov. It's a Department of Commerce type of website. And you can put in the zip code of your operating region and it will give you the growth sectors by NAICS. So you can really be deliberate at targeting those industries that are growing in your area.
That's great.
Chances are you know what it is anyway, just by driving around town or, your business conversations. But, double-digit growth rate, if you can sustain that the next couple of years and build on it, that's going to be attractive.
And I think you can if agencies have processes, procedures, good leadership, right? Like, because you can put a little rocket fuel in your tank, I still think there's a lot of agencies out there that are just going to be trying to survive and don't have a good strategy. So instead, I think they're going to be like, I say this, the agencies in this market, oh, the hard market, oh my gosh, it's so hard. I'm like, it is, but your job as a leader is to solve problems.
Yeah.
So you've also been in insurance, we're only given really awesome problems of like, it's not a soft market. Because that's to me is much, much more challenging than a hard market where I'm getting paid more and, the markets are closed. It's hard conversations for sure. I'm not taking that away from anybody, but I'm getting paid more to have those hard conversations.
I think carriers are also getting a lot pickier about what they're writing. So you might still have let's say five options for a customer, for your average customer size, but they're getting more specific with what they want. So I would say, before I hit on the actual organic growth that I'm seeing from agencies, I would say to prepare yourself is the quickest way to understand this number is if you know how much you're growing overall fee and commission over the previous year, and your net written growth percentage. So if you were measuring your new business and your retention and you have that net growth, you can divide that by your overall fee and commission from the previous year. And if you extract that from your total growth, there's generally a pretty good idea. If you're growing, net growth at 5% and you're growing 10% overall, 5 of that is probably coming from rate alone and from, this hard market. So that's always my key point. And then 2, if carriers are changing what they're going after and they're becoming pickier, going back to Kelly's point, it's okay to fire bad clients. It's okay to reform your book to what the new business standards are and what they're changing to. So staying on top of that and having really good relationships with your carrier partners, it's probably going to be a huge benefit to any agency. And I will also say most agencies that I'm seeing, if they're under, let's say 1.25 million of revenue, I would say they're probably growing about 5 to 8% at the average range right now. I do have some that are in double digits. And again, they're going above and beyond. They've got a growth organization. Everyone's involved in the sales process, or at least in growing that revenue point. And I will say any agency over 1.25 to under 5, I think 15 is probably a really good average to aim for. However, I'm generally seeing around 11 to 12% on average. So just if you know your numbers or you don't have that quite yet, that's what we should be striving for. 15 will get you to 10 million and above.
Yeah. And so I think it's just important. I think the key takeaway from this is, if these numbers are like, wow, that's interesting. I wonder what I am. You might need help from any of us here, right? Like you might need help. I just know because we have a 3-person data team. And so even just getting the numbers the first time is hard, just knowing what to pull, knowing what filters to put in. We have guides for that. But then people see their first numbers like, that's not right. And I'm like, it's as right as your system. So now we have to take the next step of cleaning it up. Don't get frustrated with that process. Like, if you want to be a $10 million agency, do you think a $10 million agency knows these numbers? The answer is hopefully.
Most likely.
Most likely. Yeah. And if they don't, well, then lucky them, but they're probably on the horizon. So just encourage everybody. Don't get frustrated by numbers. I know I hear a lot of times, oh, numbers aren't my thing. Numbers aren't my thing. But as being a good business owner and you're running a $10 million business, not an agency, numbers need to be your thing, right? So I appreciate both of you guys coming in, sharing a little insight on those items. Any final words from Kayla or Kelly?
I always had, I came from a great agency, and the agency owner always said I always hired smarter people around me. And at the end of the day, if numbers aren't your thing, there are, as you can see from this call, ample resources to tap into. So don't be afraid to know your numbers, even if you can't calculate them yourself.
I would say that it is rare that we see a perfect agency, if never. So these are all great points. They're things you need to act on as an agency owner, but don't get discouraged if you have a few challenging areas. Everybody does. And, you want to aspire to be, excellent for sure, but that's a pretty lofty goal and you should aim for it. So don't let it discourage you if there's some things that's a work in progress. And it's just really rare we run across an agency that's doing everything right. We're just human businesses after all.
And I will just say this too. I think for all 3 of our companies, like when somebody comes to us with data that's messy, there's no shame. It's like
Yeah.
you found the right place.
It's fun.
Yeah, like
complex.
I'm happy that you're here. Like
Right.
we get excited about helping everybody get through that step to understand what to do next. So thank you everybody for joining us today, and we'll see you guys in the next podcast.